Scott, let's get in the trenches here. We want to go to the leaders of each sector and see how they're holding up, see how you're playing them. Let's start with high beta tech. Apple and Amazon, like you mentioned, really started to lead the market higher.
Both stocks, these are the stocks that if you have to have money working, I like both of them. They both went green early yesterday and closed strong. You take a quick look at
Especially
Apple.
Amazon up over 2%.
Yeah, Amazon's been a monster, and it's actually doing a little bit better than Apple lately. So let's take a look at Apple first and then Amazon. Here's your Apple. This was this longer-term wedge that we broke to the upside, retested, little defined downtrend yesterday, went green. It's opening down. I think you need to be in a macro tier 1 as a trader. I will be buying it above yesterday's high at 380 or 381. And if it starts to finally get above this little downtrend, it can get frisky, and this would tell us that the market's acting better. So if it starts getting above this little downtrend, not just trading in this zone, you better be long this market or at least cover some shorts.
What about Amazon?
Amazon even closer to the highs. Take a look at this chart. This is pretty unbelievable. After this sharp decline lower, you had a reflex move back up right in front of the old highs. You're now holding higher here. Look how big this bar was yesterday. I would say you need to be macro tier 1 if you have to be long. As a trade through 216.66, you can get a little bit of a push, and then you have to watch this 220. It gets above 220. You're right at those old highs, and this could be one of the first high beta stocks to make new highs on the year.
Now, what's interesting is how this conflicts with our next group, consumer staples, because you could argue if high beta tech moves forward, that's a risk on trade, positive for the markets. If consumer staples moves forward, you can say, ooh, well, that's sort of a risk off trade. You want to go to dividends. So the two we were going to look at is Colgate and Kimberly-Clark.
Well, typically, I always like to go with the fastest moving stocks, and obviously the environment has changed. People want dividend. You can't get in the bank. People want to know that, if the economy is bad, you still have to brush your teeth and use some of these products, and they acted well. So if you look here first at CL, you will see that, we went over this in options profits, and I think the area we were talking about was right around here. So a nice trade from 84 all the way up to 92. If you did sell some on this little micro reversal, we know the 80-20 reversal trade, traded through the high, back below, you sold some. You could buy some back. I would say you could be long versus 86, but if this 86 starts to break, then that maybe they don't want this stock if the market's going to act frisky. They only want to in a more muted environment. So I think that this area you could be a buyer if you sold it at those highs on that technical reversal.
Let's go to KMB and see if they're seeing the chart seeing the same kind of pattern, that there's a
KMB
line in the
also,
sand, if you will.
Same type of thing. Nice move. It broke above the 64, went all the way to almost 70, gave you a short-term sell signal, went through the high, closed below it. Then it did it again, making a lower high. And now it's trying to hold the 50-day. If you want to be long this, I still think it's all right. Stocks are allowed to correct. I would trade it long versus this 66.29. It shouldn't get below there. Otherwise, you're going to see 65.34 real quick.
Let's go to cloud computing, because VMware was up more than 2% on Monday. Now, tech was really a bright spot, obviously, but I'm hearing that within the sector, cloud computing is really where the growth is going to be in 2011, 2012, and onward. So what's a good long trade for VMware?
Well, if you have to be in anything, we want you to be in the leaders of each group. And BMW has been on my go-to list for the past 3 years. Hasn't acted so great the last I would say 2 to 3 months, but it's still okay if you have to be in a tier 1 in this group, and this group is a hot one. BMW, if you look at the chart here, has held higher. This was the recent low, so it didn't even come back down to it. I would say it went green yesterday, which means it's in the game when this market wants to act well. It's coming into these moving averages. I'd say as a trade, it starts to get above 90. You could be a buyer of it short term, and then once it does clear this little downtrend or this more macro downtrend, it's got room back to 100 and perhaps higher if this market gets some steam. So tier 1, and you could add to it if it starts breaking above this area.
All right, let's go to ags, in particular CF and Deere. Both ended slightly lower, but Deere was pretty flat. It got a pretty solid retail August retail sales report. Says divisions like retail tractor sales and construction and forestry units had double-digit growth. That's huge. We also had a relatively bullish USDA corn report also. So you would think Deere, it's like a sure win.
Well, Deere has been acting better than Caterpillar. We've talked about that a few times over the past few months. Deere, if you have to own something in this group, this is one that gives you more bang for the buck right now. It also did the same thing as the market, tried to break below this trend line, closed back above it. This is somewhat of a buy signal. So you could be in tier 1, and I think guys looking for momentum are going to wait till it trades above this downtrend, another wedge. There's wedges everywhere. So it really has to get above this 76.70 for anything more than just a tier 1 for a cash flow trade. So this is in the game. I would say go with this over Caterpillar. Take a quick look at Caterpillar. Look at this. It went all the way back down to the lows, so it is acting a bit weaker compared to Deere.